Welcome back to Investing Talk podcast.
Today, we're looking at MP Materials.
As usual, before we start, subscribe, like, and comment to this video to support the show. And if there's a specific company you want us to look into, leave it in the comments below.
So let's get into the analysis.
Okay, so when you first glance at the numbers for Q3 2025, you might get the wrong impression.
You really might. You see revenue at about $53.5 million, and you think, okay, that's down almost 15% from last year.
Which, for a growth story, that sounds like a flashing red light.
It absolutely would be, if that were the whole story. But the context is everything here. That drop, it's all because of commodity pricing, which they just can't control.
Right, and the market knows that. The interesting thing is they actually beat analyst expectations on that revenue number.
Exactly. And the real story, the one people are focused on, is what they did control. And that's the operational side of things.
And the execution there has been, well, pretty phenomenal.
It really has. We're talking record output of NdPr oxide, that's neodymium and praseodymium.
The key stuff for high-powered magnets.
That's it. Record output for 3 straight quarters from their Mountain Pass facility. And on top of that, record metal production at their Fort Worth plant.
So they're clearly firing on all cylinders production-wise.
They are. They're making that jump from just being a mining company to a full-on integrated producer. And that momentum, that's what's driving everything else.
Which translated directly to their earnings, right?
Yeah.
Even though it was technically a loss.
Yes. EPS came in at -10 cents. But the consensus was forecasting worse. So it was a beat.
A pretty solid beat, actually.
It's that classic case of, doing better than expected even while you're still in the red.
And the forecast for the full year is still a small loss. But the big takeaway here, the inflection point everyone's waiting for, is Q4.
That's the pivot. The consensus is that they finally flip into the black, formally become profitable, in Q4 of 2025.
And that's huge. It means the market believes they've cracked the scaling puzzle, and now all those strategic advantages can really kick in.
And that takes us to their competitive moat, which, frankly, is unlike almost anything else out there.
You really have to zoom out from the P&L statement. This isn't just another company.
No. Mountain Pass is the only scaled rare earth mine and processing facility in the United States, period.
That's the whole game right there.
Yeah.
It's not just a business edge. It's a piece of critical national infrastructure.
And that is exactly why the government is so involved. We're talking over $1 billion in government funding.
Now, sometimes you hear government funding, and it can be a red flag. But here, it's different.
It's completely different. This isn't a bailout. It's a strategic investment. It's about national security and taking back control of a supply chain that China dominates.
Over 90% of the market, right?
Something like that. So for defense, for tech, having a reliable domestic source is, well, it's non-negotiable. And MP Materials is the one.
And that support goes way beyond just writing a check. It creates some really powerful structural advantages. We should probably get into those partnerships.
We have to. They're fundamental to the whole thesis.
First up, you've got a major tech giant, Apple.
A multi-year deal for magnets. And, importantly, Apple gave them a $200 million prepayment. That's a massive vote of confidence.
But the Department of Defense support, the DoD deal, that's what really changes the entire risk profile of this company.
It's a game changer. And it's not just the capital, though there was plenty of that. A $400 million investment, a $150 million loan.
No, the really critical part is the offtake agreement.
The 10-year magnet offtake guarantee. So the government is basically saying, we will buy your product for 10 years at a guaranteed minimum price.
And what is that price floor?
It's set at $110 per kilogram for NdPr.
So for listeners who don't follow commodity markets, what does that number $110 actually mean for the business?
It's price insurance. It means if the global market price for rare earths crashes to, say, $80 a kilogram, it doesn't matter for this contract. MPC still gets paid $110.
So it puts a concrete floor under their cash flow for a huge chunk of their business.
For a decade. It basically guarantees a foundational layer of high-margin income, which makes that path to profitability almost a certainty as long as they hit their production quotas.
Okay, let me play devil's advocate here. If it locks them in at a $110 floor, what if the price of rare earths goes to the moon, say $200 a kilogram? Does this contract cap their upside?
That's a great question. And yes, for that portion of their production, it does limit the extreme upside. But look at the trade-off.
Certainty.
Exactly. For a capital-intensive company that's just hitting profitability, predictable cash flow is gold. It lets them plan, it lets them fund their big expansion projects without worrying about commodity swings. They chose certainty over a potential, lottery ticket.
And those projects are all about vertical integration. They're
Yeah.
not just digging stuff out of the ground anymore.
Not at all. They're controlling the whole process. From the mine to oxide separation, all the way to finished magnets, that's where the real margin is.
And they're expanding that idea overseas with the Saudi joint venture.
Right, but in a really smart capital-light way. They have a 49% stake.
So capital light means they aren't footing the whole bill.
Exactly. They bring their tech and their expertise, and the Saudis bring the capital and, potentially cheaper energy. It's a fast way to grow their footprint without draining their own cash.
Speaking of cash, let's look at the balance sheet, because it seems rock solid.
Oh, it is. The liquidity is incredible. A quick ratio of 7.51, a current ratio over 8.
Okay, translate that for us. A quick ratio of 7.51 means what?
It means they have enough cash and easily sold assets to pay off all their short-term bills 7.5 times over.
That is an enormous cash cushion.
It's crucial. When you're building massive, complex facilities, there are always delays, always cost overruns. This liquidity means they can handle it without panicking.
And their debt is pretty manageable too, a debt to equity of about 43%. But the key thing here is where the money is going.
Right. No dividends, no stock buybacks.
Which some investors might not like.
Maybe. But every dollar they have is being plowed back into growth, into building out these huge new projects.
Which are the key to the long-term story. You have the 10X facility.
And the really big one, the heavy rare earth separation project.
Let's pause there because this is a huge deal. Why are heavy rare earths like dysprosium and terbium so important?
Great question. So the light rare earths, the NdPr, that's for your standard EV motors, consumer electronics. The heavy rare earths are for high-performance, high-temperature stuff.
Like military applications.
Exactly. Jet fighters, missile guidance, advanced defense systems, things that get really hot and have to perform perfectly. These heavy rare earths are scarcer, harder to separate, and they command a much, much higher price.
So by adding this capability, they're tapping into a whole new, higher margin market.
A huge one. And that facility is scheduled to come online in the first half of 2026. That date, 2026, is what the entire investment case is anchored on.
Okay, so let's shift to how the market is reacting, because the stock's price action has been pretty explosive lately.
It's been a rocket. We saw an 11% jump in one went, then another 5% gain intraday to hit a high of $67. And this is on heavy volume, too.
About 23% above average, I think. This isn't just a quiet drift up.
No, this is big money chasing a story. And the technical picture looks very bullish. The stock is trading well above its 50-day and 200-day moving averages.
So for someone who isn't a technical trader, what does that signal when the short-term average is above the long-term one?
It signals that the recent positive momentum is really strong and is starting to pull the longer-term trend up with it. It suggests institutions are buying in, not just day traders.
And it seems to be driven by specific news.
Absolutely. The formal completion of that DoD offtake deal was a huge catalyst, but there's also a lot of, geopolitical chatter fueling the fire.
The market loves a good rumor.
It does, and there are a couple floating around. There's been speculation about the U.S. gaining access to heavy rare earths in places like Venezuela.
Which is still just speculation, to be clear.
Completely. And then you have the persistent rumors about Greenland and the U.S. trying to lock down non-China sources of minerals. All of this, even if it's just talk, feeds the narrative. The overall news sentiment has been consistently bullish.
Which, of course, brings us to the other side of the coin, the bear case.
You have to look at it, and the first, most obvious risk is the valuation. It is steep.
To put it mildly, the price-to-sales ratio is almost 23.
23, when the industry average is what, 1.4?
It's a massive premium. You are absolutely not buying this on current earnings because they're negative.
Yeah.
You are buying the promise of 2026 and beyond.
And that promise hinges completely on flawless execution. Any big delay on that 10X facility or the heavy rare earth project, and the stock could get hit hard.
And it's not just building it. They have to meet the quality standards for partners like Apple, which are incredibly high.
For sure, a quality control issue could be a major setback.
Then there's the insider selling. It's always a bit of a yellow flag.
It is. The selling has definitely been dominant lately. The CEO sold about 300,000 shares, which is nearly $20 million.
Now, it's fair to note this was under a pre-planned 10b5-1 schedule.
It is, and that's important. A 10b5-1 plan is set up in advance, so it's not like he woke up one morning and decided to dump shares based on some secret bad news.
It mitigates the panic factor a bit.
A bit. But you still have to look at the total. Over the last 90 days, we've seen more than $62 million in total insider sales.
That's a big number. It's a lot of capital walking out the door from the people who know the company best. It just suggests that, maybe they feel the stock is fully valued right now.
It's a point of caution you have to weigh against all the upside.
So, looking forward, what are the key things to watch?
The next earnings report, for sure, that's expected in early February 2026. That is the moment of truth for that Q4 profitability inflection.
If they hit it, the story is confirmed. If they miss,
The stock will feel the pain. Beyond that, you need to watch for any updates on the construction of the 10X facility. Is it on time? On budget?
and the biggest one is probably the heavy rare earth commissioning, still slated for the first half of 2026.
That's the one. If they hit that timeline, the whole thesis accelerates. If it gets pushed back, the valuation starts to look really scary.
Ultimately, this isn't just an investment in a mining company. It's a play on critical U.S. infrastructure. It's the centerpiece of this whole push for supply chain independence.
The bull case is clear. You have record output meeting transformative government funding, all leading up to the high-margin, heavy rare earth business kicking in 2026.
And analysts seem to agree, seeing 20% or more upside from here, as long as that execution risk is managed.
So I guess the thought to leave you with is this. When a company becomes a strategic national asset, one the government simply cannot let fail, do traditional valuation metrics even apply in the same way?
Or does it become something else entirely? A multi-year hold that's all about hitting that 2026 target. Make sure you subscribe so you don't miss our next analysis.